All right, we are going to begin chapter 15, and this is actually the chapter that separates financial accounting to managerial accounting. So it's the difference between the two, and financial is much more used for external reporting purposes, managerial, internal. So the very first one we've got is exercise 1, and it asks you to classify these costs as either direct material, direct labor, or overhead. So we'll just walk through this, and the key is to know what it is that you are working with. And in this case, it's an automobile manufacturer. So knowing that, we can classify these costs accordingly. So the engine, of course, is direct materials, brake pads, direct materials, depreciation, and it's on the assembly line, so that's overhead. Letter D, the glass, of course, is direct materials. Letter E, safety helmets, overhead. Salary, for letter F, they're not actually producing the car, but quality control, so overhead. Letter G, steering wheel, tires, all direct materials, and then the wages of the assembly line, direct labor. Number 2, again, direct materials, direct labor, or overhead. Letter A, depreciation on the assembly line, overhead. Licensing payments, overhead. Letter C, maintenance supplies, overhead. Letter D, packaging materials. You know, we can argue that one. In this case, they're talking direct materials, but you can argue that both ways. I think direct materials is the right answer. Paper used in the bath tissue, of course, direct materials. Plant manager, so not working directly on the line, but managing would be overhead. Letter G, the resin, that's a direct materials cost. Letter H, salary, not on the line, so then it's overhead. Letter I, the scents and fragrances, direct materials. And then the last one, the wages of those on the line, direct labor. Number 3, classifying costs as overhead. So let's see if we can identify those that are an overhead. Air conditioner, no. Consultant fees, I think that might be a good one there. That's certainly not direct labor. Letter C, the dealership incentives, no. D, depreciation on the headquarters, that'd be a period cost. Letter E, depreciation on the mechanical robots on the assembly, yes. Letter E would be leather, direct materials. Letter G, machine lubricant in the assembly line, yes, that would be an overhead. Plant manager over the stamping plant, that would be overhead. Property taxes on the head, that would be a period cost, and vice president of human resources would also be a period cost. So the only items in number 3 that are overhead are letter B, E, G, and H. Number 4, so identify them either as a product or period. Advertising, period. The CFO, period. Letter C, depreciation on office equipment, period. Sewing machines depreciation would be a product cost because it's overhead. Fabric, yes, product cost. Factory janitorial supplies, factory, product costs. Factory supervisor salaries, product. Property taxes on the building and equipment. So again, product cost. I, oil on the machines, product. Letter J, repairs and maintenance on the sewing machines, product cost. Research and development is a period cost. Sales commissions is a period cost. Salaries on the distribution center, again, period cost. Letter N, salaries of production quality control, product because it's overhead. Travel costs for media relations. Letter O, I'd say, is a period cost. Utility cost for office building, period. And wages on those operators, product costs. All right, number 5. From the following choices presented in parentheses, choose the appropriate term for completing each of the following sentences. A product, sales territory, department, or activity to which costs are traced is called a cost object. Advertising costs are usually viewed as a period cost. Factory overhead costs combined with direct labor is called, by definition, conversion costs. Feedback is often used to improve. A sacrifice made to obtain some benefit is a cost. The balance sheet of a manufacturer would include an account for WIP, work in process, and then letter G, the implementation of automatic robotic factory equipment normally decreases direct labor costs. All right, so we took care of those. Number 7, classified costs in a service company. A partial list of costs for Wisconsin and Minnesota Railroad, a short hauler of freight. Classify each cost as either indirect or direct. All right, costs of an accident cleanup. Let's hope that's not something normal, so an indirect cost. Cost to lease, of course, is a direct cost. Cost of the tract, for replacement, it's an indirect cost. Depreciation, letter D, is indirect. Diesel, of course, is direct, the fuel cost. Information technology, letter F, indirect. Insurance costs, indirect. H, maintenance, indirect. Safety training, indirect. Salaries of the dispatching crew, indirect. Wages of the switch and classification yard, indirect. And then those that are actually driving the train, direct. Number 8, as I have it listed here in the solution, it says here, list the errors, or letter, even better, letter B, prepare a corrected report. So what they're trying to have you look at here is all these different lines, and are they appropriately in the right category, and particularly those that are in overhead. So there's some items here that simply just need to be removed. If they are period costs, they're not in this manufacturing type of, as far as the cost for production. So we're looking at direct materials, direct labor, and factory overhead. If it's something that falls in the period costs, it should not be in this report. Number 9, again, they give you a whole bunch of information here. The following events took place, and it asks you to prepare a January income statement for this manufacturing company, and then determine the inventory balances. So what they have here is our income statement, revenues, cost of goods sold, our gross profit, and then from there we can calculate our period cost, that being selling and administrative, and then you get to your net income. Letter B, determine the inventory balances. So there's 3 types of inventory: the raw materials, the WIP, and finished goods. So what was the materials had a beginning balance, and then what they transferred out, 180, which then goes into WIP. See that? And then they added the 450 and the 180, and then stuff that went from WIP over into finished goods, and the 675 is what they actually sold, that they cost of the goods sold. Number 10. Manufacturing company balance sheet. So now what we're doing here is taking those accounts and just putting them into a classified balance sheet. And in this case, what they really want you to understand is that there are 3 categories of inventory: raw, WIP, and finished goods, so a total inventory. And then there are total current assets, so cash, AR, inventory, supplies, and prepaid insurance. All right, we will stop there for a moment, and then we will pick up the rest of this here in a couple minutes.